Hi, here's a typical bank reconciliation question where you're given the T account, which is a typical ledger account where the money in is on the left hand side or the debit side, all the lodgements here, and the money out is on the credit side or the right hand side, all the checks that were written and the bank charges. And when we look at this bank T account, we see the opening balance is 415, and at the end of the month the balance on the credits, the balance brought down is a credit side, which is a bank overdraft situation of 1935. You're also giving a bank statement, which is here, and the reason we're doing a bank reconciliation process here is because the closing balance, so the balance all on the right here, is 2239, which is positive. We compare that to the 1935 up here, negative or credit. There's a difference, and that's what to reconcile. So every question is going to say basically adjust the bank T account for any errors and then prepare an adjusted bank statement. So that's what we have to do. We correct the bank T account for errors or omissions, and the bank statement is adjusted for any unprocessed items such as lodgements at the end of the month that haven't been processed yet, or checks that haven't yet been presented for payment. So basically, to adjust the bank statement, we're going to start with a closing figure, and we're going to of 2239 and change that for 3 or 4 items. And up here in the bank T account, we're going to start with the closing balance of 1935 on the credit side and adjust that for any errors and omissions or items not recorded. So to start off these questions, you start off with reconciling one thing against the other. So the balance brought forward is 415. Down here is 415. They match. That's great. Okay, and then just go down the pick a side and go down. So we'll start with the lodgements. AA here is 87 versus 807. So I'm going to cross it off because I'm going to just, so there's a difference there. So we need to increase the difference between 807 minus 87. 720, so the difference is 720, and we always assume in these questions that the bank statement is correct when there's a difference in amount, because banks normally have better controls, but in real life you check it. But here we'll say we need to increase this by 720, so I'll cross off that then as being done. BB is 911. 911, that matches. Cross off that. CC 302 versus 32. So I'm going to correct any difference. So the right amount is 32. Up here it's 302. So the difference is 270. So we have to go down. We have 270 too much here, so it's a minus. So sorry about the writing, it's hard enough to do. DD is 12 versus DD here 12. EE is 50. Okay, it's 40, so I have to go down by 10 here because the correct amount is in the bank statement. And lodgement FF is 800. Down here it's 807. So I need to add 7 to this to correct it. And so I've done everything here down along. Then lodgement GG on the 31st of the month. DDEFF. There's no lodgement GG. So I'm going to just put a circle around that and say, hey, this is a lodgement. We need to, we've recorded it, we've made that lodgement at the end of the month, so possibly that's a Friday. We lodged it maybe on Friday evening, but the bank doesn't deal with it until the next day, so that's not going to appear in the bank statement until March's accounts. So that's an example of something that's not yet. So I just added in here, so the bank statement now, if we want to just adjust it, we're going to say yes, we're going to have another €333 coming in, so I'm going to add it to that. And it's important when we're doing this to tick off everything, because we can see here when we have everything ticked off, there's one thing we didn't do anything with, which is an EFT dividend received. So we received money during the month by electronic funds transfer, so it's come in. We haven't recorded in the T accounts, so Go to circle that and say, okay, we need to do something with that. So on this side, money in, we want to record dividend. So we did dividend not recorded. So I'm going to adjust the T account for these errors so far, and also dividend not recorded. Next I look at this side, check 13, 14, 15. So the checks are here. 13 is 20. 20 they match. The next check is 17, 110 versus 100. So I'll cross it off because I'm going to correct it, and I'm going to say I need to increase that by 10. Check 15 is 415. 451. So the difference between 415 minus 451 is 36. So it should have been 415. It was, so that needs to go down by 36. Because we assume the bank statement is right. So I'm going down along here and crossing off everything. Check 19 is 78. Check 19 is 78, they match. I can go this way either. I could be going down. Sometimes with the checks it's easier to start in the bank statement. Check 16 is here, 43. Come back up here, is 34. The difference between 43 and 34 is 9, so we need to increase this by 9 to bring it back up to the correct amount of 43. And then I'm down here, bank charges are 82. We recorded an amount of 33, so the difference between 33 and 82 is 49, so this needs to go up by 49 to get it up to 82. Did I cancel? I didn't. And then looking at this, there's one thing I didn't tick off. It's a direct debit, so it's something that goes through the accounts every month, 71 for Vodafone. So I need to show an amount out. So it's already gone in the bank statement, we assume it's correct, but we haven't recorded in the T account, so I'm going to show money out of 71 up here, and I'm going to have to adjust for these errors. So the T account, our new T account is going to be starting off with 1935 plus that. This goes in this side, and then all the adjustments here, 1, 2, 3, 4, 5, 6, 7, 8 adjustments. So I'll do that shortly. Before I do, we didn't do anything with check 14, check 18, or check 20. And they're examples of checks that we've written, but the person we gave them to hasn't yet presented them for payment. So a bit like down here, anything we circled as not recorded, we put in the T account. The opposite happens here. The 66, the 63 and the 4,000, they're money out. They're going to come out in future. So just to 66, 63, that's meant to be 66, and the other check was for 4,000. They're the adjustments to the bank statement. Add in the lodgement not yet processed, take away the 3 checks that have yet to come through for payment, and whatever figure we get, that's our adjusted bank statement. And it's pretty straightforward. That, so just do it here. 2239 plus 333 minus 66 minus 63 minus 4,000 is 1557. That's that. That's what that is there. The adjusted bank statement is just starting off the closing balance and add in any checks or lodgements not yet processed and take away any checks. That's the answer to part B. The answer to part A is a bit trickier, so I think I'll do that in Excel, or I could do it up here quickly, I suppose. Not a lot of space. I could do it here, why not? And then I'll show you the Excel version. Here's the T account. Our closing balance is 1935. That's your starting point. What's here? and there were two things missing. It's easy to put them in at the start. So we'd the 71 was the direct debit, not recorded, and there was 34 dividend out, not recorded. Dividend received, not recorded, and direct debit not recorded. Then the adjustments are quite easy to do. If it's a plus, you put it in the same side. If it's a minus, it goes the other side. So lodgement AA plus 720. Now you'll be putting in descriptions, and I'll show you what it looks like. Another plus here is plus 7. So the two corrections, this plus and this plus, go on the same side. The two minuses just are shown on the opposite side. 270 and 10. Then I come here and I have 4 adjustments, 2 plus, 3 pluses, 9, 10 and 49. Nine, 10 and 49, and then a minus 36. Minus just goes on the opposite side, so comes here. Add up both sides. 34 plus 720 plus 7 plus 36, 797. My keyboard is making noise. 1935. 2354. And to balance off an account, you get the difference between both sides. So the right hand side is bigger, 2354 minus 797 is 1557. So our balance brought down in the T account is on underneath the bigger side, 1557, and that agrees to our adjusted bank statement here. That's how you know you're right, when your amounts reconcile. And just to show you that in a better format, here's the T account with all those adjustments and the proper descriptions, or some kind of descriptions, and I've put in the carry down balance. If you don't have a carry down balance, you end up with 797 and 2354. When you do the balance brought down, you bring it above for carry down and it just balances the account. But the main thing is you get the 1557, and then the adjusted bank statement is here, 1557. The closing balance less the checks plus the lodgements. So that's it really, and that's how you do that reconciliation question.